how it should be done.
All right. I think we're live.
Okay, great.
Well, I mean, so the funny thing is here, right, is like I should have mentioned this before we were on air, but I do expect you to carry me here.
Oh, okay. Usually it's the other way around, right? We're going to
You're
talk
the
about markets,
you're the
right?
professional podcast host here, not me. I'm an amateur.
Oh, okay.
I'm inexperienced. This is only my like third or fourth podcast, so I'm gonna need some help.
Well, as it relates to podcasting, I'll definitely carry you. As it relates to talking about the markets, I don't know who's going to carry who. We're both above water, so we're not going to.
Just
That
barely.
helps.
Just
Just
barely.
barely.
I think
Yeah.
we're both gonna get carried out one day. One day it's gonna
Yeah.
come for us. No
It's
leverage.
like isn't there like an anti-Lindy? Like there's this really good book on markets called Market Wizards. I think it was written in the 80s or the 90s. And it was about I think it was the 90s. Like the best it's like 8 chapters. Each chapter is about a very prominent hedge fund manager at the time. I think all of those 8 fund managers, 7 or out of 8 blew up at some point. Then he wrote a second book, and it's again, then you have like, so I'm like, there's an anti-Lindy effect. We talk about Lindy effect in crypto a lot, but it's like, as you said, it's like, when am I going to blow up? It's like,
One day. One day. I don't
it
know.
doesn't.
I feel like there's these sort of countervailing forces, right? Of like the longer you survive, the more overconfident you get, and then you overextend, and then you gotta, so it's this push-pull thing of like, don't get too caught up in your own ability, or you get wrecked.
So true. The other thing is, like, there's this really good book I just read called The Missing Billionaires. And it talks about how most of the wealth gets evaporated over time through generations. Like there's like blow up generations. And for a couple of factors, two main. One is they end up spending more than they're making and they don't adjust their lifestyle. And the second one is why most people blow up is this like they end up investing in things that like everyone wants to feel relevant. So like, hey, you wanna invest in things like, and I always it's so funny, right? I see it a lot with like family offices in Latin America and Europe. Now that I'm here in Europe, we get together and they're all talking about what they're investing in, and it's the stuff that people want to shuffle because they can't sell it that they're picking up. As an example, pre-IPO stuff. It's like Goldman wants to sell shares of Spotify, can't move them, with the smart guys in Wall Street, can't move with the smart guys in
some FO shows up and they're like, I'll buy your bags. Like,
so they call the family office, and the young kid who's in charge of liquid investments, because the dad, the kid wants to feel relevant, fine, and he's like, oh my God, I'm getting a chance to buy pre-IPO shares of Spotify. I'm really smart. And they end up buying this stuff. So anyways, the long story short is like Mark Andreessen has probably the best quote about markets. Just if you have like, he was asked the question, like if you have like X amount of money, he's just like, put it in the index, let it ride. But it's so hard to do that, to your point, because you want to feel relevant. You feel like you understand this market. The market has changed so much this year. And we can talk about that because you've been here, how many cycles?
I mean, 2016 was like the first time that I was really in the market, right? When Blue Shift started, and we were really, I was like watching charts all day. Mm-hmm. Previous to that, I was not like paying 100% attention. So, sure. I remember going through that period, and like I didn't even get the bear market. Like I wasn't paying any attention to the bull market in 2013. I was off doing other stuff, right? And then by the time 2016 came around, and I was paying attention, I didn't even know it was a bear market.
Yeah, it's true. It becomes, I guess that's a really interesting observation. Like it only becomes a bear market as a percentage of your net worth or something. Like crypto at some point becomes a thing that you can't overlook. But it's been 3-4 bear markets in earnest. Like
I guess so. Yeah, I mean that so that would be the first one, right? And then we came 2017, and then 2018 bear.
That's when we met properly. And I want to talk about that and go to that moment. at the Binance conference in Singapore, the first one, January
2018. Yeah,
2018, I want to say. The
January 20.
absolute low for
Yeah.
a lot of things, including SNX. But I want to go back to that moment. And then, of course, you had the 2020 crash of like DeFi summer NFT, like FTX collapse. And then we're here.
Yeah.
Which we're not in a bear market. But I don't know. Like I was in this cycle, it's been quite difficult, I think. And we can talk about prior cycles, but let's just get in front of it because people like they want to understand what's going on right now, I guess. Like it's not easy. Like for me, it hasn't been easy this cycle. I benefited because I was able to change my mind earlier, like last year, on particularly Solana, particularly meme coins. And I was lucky. Like you're punting stuff in meme coins, and like most of this stuff goes to zero. I was very lucky. I was listening to some people that are smarter than me, that are more plugged in, younger guys, scrappier guys. 1 out of 100 shot, right? It's like that picture in an airplane, which is like, why airplanes survive. It's like, well, it's selection bias. But a couple of things that make it very difficult this cycle that I think you didn't have last cycle. One, higher interest rate environment. So it's more macro dependent. You also have the wonderful 7 in the market ripping in your face. So the opportunity cost becomes really difficult to stomach when like, and especially because the returns in both equities and crypto have been fairly concentrated.
Yeah, agreed. Yeah.
And so if you're sitting on ETH, you're hating yourself. I hate to say it.
Because I mean, yeah, like, yeah, you and I have talked about this, right? Like, and I mean, even worse, right? Even worse is if you're sitting in DeFi.
Yeah. Well, DeFi's been in a perpetual bear market. It's picked up. It has actually held up fairly well this year. I think people are come back, but yeah, it's been difficult, right?
Actually, I want to come back. Like maybe I'm living in fantasy land here still, but like my view is we're actually at the tail end of 2019 here, right? This is not a real bear market. We're about to, the last year has been a bit of a fake out 2019 style, ETH $80 to 300 and then round tripping back to 80. And then, we know what happened after that. Right. So my view is that like, we kind of got excited. There was no real macro liquidity coming in. Like we're about to actually see the macro liquidity injection come in. And I think that this crash and then the response to that will really kick things off. I've been saying the entire time, like the more time we have to build
consolidation,
the better. Yeah, exactly.
Yeah. I think that's right. Like Kobe's of this opinion as well. GCR sort of is also in this. I mean, he's been quiet, but yeah, and the timeline's been sort of dominated by these like more trader type guys, like newer folks that are just like, it's really hard to trade the chop. Extremely hard. It's like playing the slots, like the casino will just take your money.
Yeah. Well, you pile on leverage, right? You pile on leverage and you're like, all right, it's volatile, but like ranging, you pile on leverage, it dumps a little bit, you get liquidated. Yeah. You come back, try and build it back up, right? Not, like this is just watching. And even, in our office, right? I've said so many times, like, you're not going to be able to trade your way out of something, right? Like if you genuinely want, to do well and have like, the most sort of positive EV approach is like, just go and build something.
Yeah.
Go and build something, and that's going to give you the best chance of being successful in crypto. Trying to be a trader is, survivorship bias, as you say, right? Like it's the picture of an airplane. Like we have crypto Twitter of all these amazing traders, deleting tweets of all of the wrong trades, right? And you actually look at their P&L and it's oftentimes
or eventually they'll blow up. And that's the most important thing. Like I think you optimize for survival. Look, so this weekend I wake up Saturday. Berkshire earnings suck, and Buffett sold most of his stake in Apple, which he had telegraphed way before. And I look at that, I'm like, oh shit! Like it's just gonna immediately. You're like, all right, crypto markets are gonna absorb this on the weekend. It's gonna be and low liquidity on the weekend, so it's just perfect setup. First of all, it's August and it's a weekend, and you had a terrible headline. You're like, yeah, and then decides to do their thing. But it's uncomfortable, right? Because you're like, I don't understand how this carry trade unwinds of the yen, and so I was in an slightly uncomfortable spot. Like I don't use any leverage, but you still think about, okay, is my position sizing wrong? Like, am I taking too much risk? Should I protect my principal? Should I go a little bit more defensive? Because I wanna be in a position of strength when no one wants to touch this stuff.
Yeah.
So that's unfolding, and you're like, so I get a call from, I get pinged by all the funds, like all the liquid guys, and like, what are you doing? I'm like, I don't know, what are you doing? and we both we all go and assume because it's happening at the same time. Like, I guess you're both pinging me. Let's just go on. You know each other. We all agree on one thing, which is the most important thing that you just said, which is we're all bullish. Like, we all agree that in 12 to 18 months, with a higher probability, you hit, like, we're higher than where we are today for a variety of reasons. There's ETFs. There is more adoption in crypto. There is just Larry Finks of the world that are in the fold. And it's like, so don't trade, these temporal moments. It's like, and they had flipped bullish after the assassination attempt. They're like, all right, they took some risk off, then they're put some risk on. They're more tactical. I'm not. And I think, like, you just sit there and you're like, okay. The question that I had and why I was uncomfortable is for this reason, that I think you you optimize to be in a position mentally of strength when shit really goes down. Like, because to your point, it doesn't get easier. Anytime something goes down a lot, like ETH at 22, Sol could have gone at 80, could have. And it feels nice to have a little bit more cash at that point to jump in and bid. And if your sizing is off, you're maybe not going to do it.
It's funny. I was saying, like, if you look at the moves, right, and it doesn't exactly overlay, but if you look at one cycle behind each thing, we were talking about this, right? We were talking about this when you're in Sydney. Solana is like one cycle behind ETH, and it did that like same round trip thing that ETH did in 2019, right? Like, it was a little more aggressive, like 20 to 250, and then back down to 100 or whatever. But like, it's very, very similar sort of move. So yeah, I mean, there's I think a moment, and for me, it's like, it's just about conviction, right? Like, if you're sitting there like, in 18 months, everything's going to be better than it is today, and I think that has been basically proven true at any given time in crypto for the last decade or whatever, right? And so if you're kind of like, all right, directionally I'm right, then you need conviction. But when, like, I mean, for me, it was
cash to bid.
100%. You need cash to bid. But even if you're in spot and you're like, I'm sitting in spot and it's fine, right? But like, I mean, I remember March 2020, I was like, this could actually go to zero. Like, I had a moment of like,
yes,
this, like, it probably won't, but like, it could, right? Like, I could see it just, the bottom just falls out. There's no bid.
I was on a phone call for nonstop, like hours on end, to specifically Maker. You're like, if Maker doesn't hold, we're going.
I mean, we had that chart. Ugly. Remember the little chart of like where the liquidation,
the rescue financing, for Maker, like the onboarding of USDC on a, like, no one wanted to do it because VCs are like pontificating. I'm like, guys, if we don't onboard USDC as collateral, we're done. Lights out. Like, But it was very scary. Everything in your body tells you, like, survive and brace for impact, but you should probably do the opposite and, like, really go long.
Max bid.
I don't think this was like that event. I mean, it certainly was in March 2020. It was like, but it was, for people that are new, it probably felt like that.
Well, I've got so many new people in the office. That's the crazy thing, right? I've got guys that, you know, they've maybe had a little bit of Bitcoin here and there, but like they've never been watching charts, right? To like, I think when you start watching charts and you're like looking at prices on a regular basis, and like you wake up and the first thing is like, okay, what happened overnight, right? Once you're in that mode of like, this is now meaningful to, you know, my livelihood, then you know, I think that it's different. And we were in a meeting, and you know, and I'm talking, all of a sudden like the office is in uproar, and I'm like, what's going on? And I opened the door and I was like, hey, what's happening? They're like, ETH's nuked to like 2,400 or something. And I was like, cool. I just closed the door, went back in the meeting. I was like, okay, like nothing we can do here, you know?
Right.
And also like 2,400, you know,
still, it's not, I mean, it's not terrible.
Yeah, it's not terrible. It's not
Like
terrible.
a lot of the CDPs, a lot of the liquidations happen like sub 2, like 14, 15, 16, 17, like 18, below 18, I think. Sold sub 80 kind of thing.
Yeah.
But yeah, you know, going back to your point, like I want to recount this episode. Like I remember meeting you. I'd invested in Synthetic Haven.
It must have been 2019.
2019. It was January 2019. Binance held its first conference in Singapore. Binance was still relatively small, to the point that you can walk up to CZ and like shake his hand, you know. And
well, I actually remember standing there and watching him talking to SBF. They were like taking photos together. Yeah.
Yes.
They were taking
Funny
photos.
enough, I'd met SBF on that trip. I'd stopped in Hong Kong before and I met him because I'd heard rumblings that there was this prop shop that was like trading all the Bitcoin. I'm like,
super smart kid that was,
yeah. And then I saw that infamous deck of guaranteed returns. I was like, yeah. And met his compliance officer, who was a 18-year-old, like what looked like a 22-year-old Australian dude with tattoos. And I'm like, this is not what a compliance person looks like. Nonetheless, I vividly recount meeting you. SNX was so I was an investor in Haven, SNX, and I'd gotten somewhat more involved, like when the price went down. It was just talking to specifically Jordan and your team.
Yeah.
And I meet you like in one of those like hallways or whatever, Marina Bay Sands, and you're like, SNX just hit an all-time low, and you're like, you know, and you said something that really stuck with me. It's like, you know, you're in a bear market when the more like any announcement that you post, whether it's, you know, will be taken and the price is going to go down because people are reminded that they hold this thing and they just need to liquidate. And he's like, but we've actually been posting some really good progress. I don't think, and at that time, I think Framework was like buying, like that day, I think someone stepped in and bought like a lot.
Yeah.
And you're like, oh, this is interesting. We don't know what's going on. But I think it highlights a point that you say, like, if you can't build, I'm not a builder, go talk and get involved in communities, because that's what has given me the most amount of comfort. I'm like, all right, like, because you hear it on the timeline. Price goes down and people become too emotionally attached to something. They go, this is a scam. You know, this project is worthless. Nothing's happening under the, and like, have you actually cared to talk to the team, gone on Discord, tested the app? No, they're just looking at a chart. And so
yeah,
I think if you really want to have conviction, for instance, if you really wanted to spot a trend, well, you have to be using Maker.
Exactly.
To understand DeFi. You perhaps this cycle had to be using maybe Solana to understand that it's not just a meme coin chain, or, you know, you had to be testing out Infinex, not to be a shell, to understand that the UX in crypto is smoother than
it can be better. Right?
It can be,
and like, you know, to your point,
it can still be better, but it's one of the best, and it's at parity, and it's not like your mom can't use it kind of thing, right?
You click buttons and things happen, right? And you know, Solana is an interesting point, right? Because I had not done, and I think I said it was like that week that you came to visit, right? And I had never done a Solana transaction. Yeah. Now, like, there's a level.
Context, December of last year for folks.
Yeah, exactly. It's like a year ago, right? I'd never done a Solana transaction. Mm-hmm. Like, the level of like mental gymnastics to be like, I don't think Solana is a good, like, of course, you know, you can look at it like at a architectural level, how it's designed, what the trade-offs are, right? And, you know, that was kind of my perspective, but like, it feels a bit weird to be like, no, like, this is not real, but I've never used it.
Yeah.
Like, it's the equivalent of like an anti-crypto person who's like, I've never actually, you know, touched anything in crypto, or, you know, moved stable coins or anything like that. Like there's a magic to using things. And so, as soon as I used it, I was like, okay, like this isn't,
Yeah, I mean, to be fair, the apps, and I'd invested in a few during the FTX pre-FTX collapse, and the apps
maps,
after that, night and day.
maps.
Yeah, night and day. Like the app, like you had like some of the money markets there, some they were Yankee, they're difficult. The wallet interface, like the ledger support, these things on the margin, like you give up, right? You revisit, and I'm like, I think for me it was testing Jupiter for the first time and saying, holy shit, like this is everything I want. Everything that I want in like buying on chain is here, and it's great,
Yeah.
it's smooth, it works. It's not perfect, but there's failed transactions and sandwiching whatever. But you're like, okay, this is smooth. And Phantom, and like you're like, realistically, if you're gonna onboard a normie, this I'll stop with my Solana shill. It's probably gonna be in Solana back then.
Yeah.
So it pays to test stuff, and I feel for me it's all too often like you need to have clear what your thesis is, and obviously update it, refresh it, but also test other stuff that might invalidate that thesis or might change your mind on things, because the stuff moves really fast in crypto. We're just so early that it's still like 3 months. If you're out for 3 months in the summer, you gotta come back. You got to come back and refresh your memory.
Things are different. Yeah.
Things are very different.
Yeah. Agreed. And I mean, even it's interesting as I've gotten deeper into the Solana community, right? Like it's a different vibe. I did the Jupiter call, right? Their weekly call, like this thing was insane. I was sitting there, I was like, the effort that these guys are putting in on a weekly basis in terms of like engaging the community and communicating and getting people excited about what's like, coming. It's crazy, right? Like far exceeds anything that we were doing in DeFi. Like we set up a Discord server and we were like super impressed with ourselves, right? But that's competition. You introduce competition, and all of a sudden, the people who are trying to be the fast followers or trying to take down the incumbents have to work much harder. And the market moves forward, and now there's a level of kind of engagement, et cetera, that you need to reach, because like at the end of the day, it's an attention game. Right?
Yeah. And that's something that I've really come to appreciate. It's not like financial, like not to just concede to the point that crypto is just a casino, but it's like, so I was at a dinner with like in New York when the ringing for the ETH ETF happened. So I was there. I was like, yeah, I'll go. And there's a few funds again, same similar profile people, and they're talking about like investments. They're like, yeah, like we're talking about the Olympics, and they're like, it's this guy had gone to USC, and there was a professor there at USC. He was like he's like a very successful exit founder or whatever, gaming. And they're like, yeah, sport franchises are so valuable, like we should, this is something that like, everyone's talking about. And I'm like, okay, what gives a sports franchise any value? Like, oh, well, you got to negotiate the media rights. I'm like, yeah, absolutely. And what derives value from those media rights? How do you value that? And they're like, well, it's viewership, right? I'm like, yeah, exactly. And ultimately, what is viewership? And they're like, well, it's people care about this thing. They're really passionate about the sport. I'm like, exactly. But what is it? And like, it's attention, right? You basically have to tell people to sit down for 40 minutes or an hour or 2 hours or whatever and watch a thing and feel fanatical about it and go out and buy merch. And I'm like, how is that any fucking different from a meme coin?
Yeah.
I'm like,
exactly.
There's nothing tangible there. I'm like, okay, you don't have Messi or Cristiano Ronaldo, but you have a nice, cute dog. I mean, yeah. I love crypto because if you really stay in the game, the most fascinating thing is that it constantly challenges, like in the crypto journey, you are forced to question very basic assumptions about why the world works the way it works, what's wrong with it, and that may totally challenge your worldview. And it's up to you whether you want to change it or not. I think if you want to make money, you have to be willing to update that.
Exactly.
And
Yeah,
if
I
you
mean, look
don't,
at
that's fine. Go, buy
yeah,
bonds.
yeah. But yeah, if you don't, I mean, all the Bitcoin maxis that were, uh, you know, too smart to go into the ETH ICO.
Yeah, a lot of them are.
Like, no, it's a
But
scam.
yeah, but I think you I would characterize as probably one of the, first of all, like a lot of people that were early are no longer here because they check out, they want to do other things, and that's fine. You've kept building. I think you have a really good. You used to have a pinned quote in your Twitter profile, which a lot of the founders that I invest in just go check out Kane's Twitter, and like there's one pinned tweet in there that I want you to see. And he's like, you haven't been called a scammer, you haven't been building long enough.
Yeah.
Building, I think, is way more. We've been talking about investing. I think building is far more difficult because you're responsible for the price to go. Like it's your head.
Absolutely.
And if the
Absolutely.
price goes up, it's like, yeah, obviously it's your job. So it's like a very negative. It's a very bad bargain.
It
But
is.
you've been around for a while. You've kept building through cycles. DeFi has been in a pretty prolonged um, game where no one cares about it ish.
Yeah.
But now, more importantly, you've like updated your thesis. Like you're looking at other ecosystems. You're interested in Solana. I think that's really rare. There might be projects that have this multi-chain approach and then they get grants and, like whatever. But from a seriousness perspective and like really pushing the space forward, I think what you're
Mhm.
building with Infinex, having understood what, the challenges with synthetics, I'm just curious to dig in on that. Like, I know we're supposed to talk about markets, but,
Oh, we can talk about whatever. It's fine. We
okay.
just
Yeah. Well, like what were you seeing for Infinex? And like I'm just curious to understand like the end game there and how you more transitioning to like, because I think DeFi is really going to have a resurgence at some point.
yeah.
It works extremely well.
It works so well that it doesn't get attention. It's
Ah,
actually like
well
it's
said.
actually painful, right? Like it, at least there was a period where like it would get hacked every 20 minutes, right? And then like we kind of weeded that. Like there was a period 2019, 2020, 2021 where like every few weeks there was a giant hack, right? Like at least that got attention for the space, right? It's like, okay.
Yeah.
But yeah, it's almost too sedate these days. That's fine, I think. It's been around. I tweeted the other day, like it's the only thing in crypto that has demonstrated over like multi-year time frames the ability to handle billions of dollars, right?
True.
Like, and across like multiple different sectors in multiple different ways. I'm in a little bit of a hot water at the moment. We can talk about this later. I just tweeted something, just a level of like frustration that I have with the EF and Vitalik about their like anti DeFi stance, right? Like,
Well, yeah.
if ever DeFi needed some love and support from like, the people driving the ecosystem and who have the most attention, it's now, right? Like DeFi is the thing that's holding everything together right now.
Yeah.
Everything else is nonsense almost on some level, right? Like it's and when I say DeFi, like I'm not like Aave. Like
Yeah.
Aave, Maker, like these things are working. They held up in like another crash, like, and yet trying to get people to kind of talk about how impressive that is hard, right? Like someone mentioned, DevCon doesn't even have a DeFi track.
Wow. Really?
Like I don't even
This
know if
year
that's
or prior years? Well,
this
maybe
year.
prior years.
Apparently there's no DeFi track. I don't know. I need to look at that, but I saw someone tweet it as I was walking down here, and I was like, if that's true, like that's madness. So I might
As
be
much as I
fine.
want to be in Bangkok, I'm not going. The level of wokeness amongst the Ethereum community has reached the point where it's pissed me off. And well, I mean, I have a lot of issues like with that. It's not why I like Solana more. I think independently, I just really enjoy. Like, it's not that I don't like ETH. I have a lot of exposure to it, but it's frustrating. Like
Yeah.
even the whole bipartisan, like single issue voter
Oh,
tweet of Vitalik. I'm like,
oh
I'm
man.
sorry, dude. you're not just on the ground because you don't understand. It's like it's not practical,
Yeah. It's a
and
lack of pragmatism.
somehow
Like really, like
people make money. There's another guy that said, Solana is just memes and it's all just like very like get rich quick mentality. And even the memes in Solana are like, this pump fund thing is like all these memes go to zero because there's not quality memes. Look at like the memes in Ethereum. I'm like, listen, brother, you must have not been around for DeFi summer and you must not look at the chain because there are hundreds of memes on this ERC20s that also go to zero.
Yep.
And so it's like this idea of like, Ethereum was great. It made a lot of people money, and then it sort of enshrined itself into this culture. But it's sort of like now looked down upon other people trying to make it, other ecosystems.
a little
And
bit.
it's like this distinction in Europe is very prevalent. In the US, no one cares. It's like, are you old money or new money? If you're new money, you're nouveau riche. You like you're tacky. You don't have the same level of respect in a dinner conversation. Put it that way.
Yeah. Yeah.
If you're old, if you're old money, you get invited to the nice parties. Even if you could be dumb as a brick. You could have just like been on real estate, discovered like there's oil in your land, or be a farmer or whatever, and you're the son of a billionaire. And you're like, all of a sudden people want to pay attention to what you have to say. I'm like, are you actually fucking smart? And I think that's a little bit of the Ethereum culture where it's like now they've shunned away from the things that actually made Ethereum work, and are like in this sort of no man's land of like, what do you actually stand for other than like rejecting things that have worked in your chain that have made people money. And I don't know, it's a bit frustrating, candidly.
Yeah, it is a bit frustrating. And like even, look, like I don't love Trump, right? But like at the end of the day, it's not even about who the alternative is. It's like these people are trying to kill us. There are people who are trying to kill you. Like
at least with the other, you can try to bargain and like create
it's a crazy mentality to be like, let's reason with them.
No,
like
yeah. You've tried to reason with them for the last 4 years.
They've got a shotgun. Like they're coming after your family. Like you're gonna reason with them. Like, hey, we're actually not as bad as you think. Like, can we just talk about it?
And even more impressive now that people are like, oh, let's hear Kamala out. First of all, she doesn't want to talk to you. Second of all, she just picked a VP that is very much in Gensler and Warren's camp. So I think there's no hiding here. What
they're pivoting, bro. Just wait. Just give it.
It's
one more week, please, bro. One more week. They're pivoting. It's coming. They're gonna change their minds. They're gonna love us. It's madness.
Yeah. So what's your stance in terms of like I mean, ETH obviously now has an ETF. I still think it's super positive for the space because first of all, Wall Street now has a way to make money on crypto. And I think that irrespective, so I think the market's like traded sideways, probably will continue to trade sideways because the odds of Trump winning on any prediction market have peaked. It doesn't get higher than the day after the assassination attempt. Like so they're going to come down and the market's going to react to that because, one is good, one is not so good for crypto. I actually think this is a good thing if you're a trader or an investor and you're looking to get exposure to the space. You're going to get probably, between August and September tend to be really crappy months anyways in the markets. But if you have the long-term conviction, one, you have the ability to get exposure to the space very easily through your brokerage account if you're like traditional markets or whatever. But also like, it's probably going to be a little bit choppy and messy. I think the market's focused way too much on these odds of like, looking at odds of like, oh, Kamala is like converging on Trump. I'm like, fine, and the market kind of moves very much in line with that. But I was just having this thought yesterday. It's like, shouldn't we be talking more about in what scenarios are Gensler and Warren, and what is going to be their positions or not, depending on who wins.
Yeah,
because I think that's a more important nuance point. It's like, okay, can Kamala win and Gensler's out? Maybe, maybe not. What about Warren? What happens to her?
Yeah,
like there's not more talk about that because that's I think where the real stuff happens, right? I mean, sure, you can have a directive from the executive, fine, you can appoint, but those are my observation and everyone I talk to is like
Warren's not going anywhere, right? Like,
yeah, she could be kind of neutralized. I
Yeah.
guess.
Yeah. I mean, I think it's, again, it's sort of shocking to me. Like, and I was in the camp. I remember I had dinner with a couple of friends of mine, other DeFi founders, like 2 years ago, maybe 2.5 years ago, and we all sort of were sitting around saying, we've been building nonstop for the last 3 years, right? We got through DeFi summer. We had this huge breakout moment. Everyone, realized how powerful this technology was. And yet we still have regulators that are like a bit unsure about what we're doing, right? Like, is this going to be good or not, right? And there was a view of like, we have more work to do in educating, right? We've proven the thing works. Like, let's go out and try and educate. And I spent time and spoke to like Treasury here in Australia, and I like had a bunch of different interactions with different people in government, and so did both of these other founders. One of whom invested a lot of effort in this, right? And then like a year later, we came back and we're like, actually, it turns out they hate us.
Yeah.
It's not like, it was not a lack of understanding.
No, they're not like even willing to hear you out. They won't even take a meeting.
Yeah.
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 I think
they
it's
just want to shut it down, right?
Yeah.
So
it's funny because look, the market was trending up. Trump wasn't even in the conversation of driving the market and prices in January. So you're sitting in January and you feel bullish about crypto because you have a chain that, you for a variety of reasons. The narrative was you have a Bitcoin ETF, probably going to have an Ethereum ETF later this year. You have Larry Finks of the world doing God's work to evangelize, and he's on your side. Wall Street always moves. Like to me, industry is what pushes forward and dictates ultimately what happens in government. Historically, you haven't had Wall Street have the easy ability to profit from this industry.
Of
now
course.
you have. Now you do.
Like, there's no point in shilling something that you can't make money on.
Right.
Like,
and now they can make a lot of money on this stuff. And you look at the volume of these ETFs, and it's not trivial. It's trading in the orders of billions a day. Like yesterday, like Monday, the session, like you had over $1 billion on
crazy.
each Bitcoin and Ethereum. And so I think this political, while it is important to track and whatever as an industry, and they might on the margin impact, I think people are placing way too much emphasis on that, and that's just going to be noise in the near term. But in the long term, this train's fucking sailed. Like this train's left the station. You have a Wall Street machine. We just legitimized a fucking asset class.
It's done. It's done. Like, I mean? I'm 100% there. It's done. It's not an issue of like, it's not killable anymore, right? But this is kind of, I think, the most dangerous moment, not for the industry, but for like individuals in the industry, because you have people who have been, openly antagonistic and hostile for years, about to lose, right? And they're cornered. And what are they going to do? They're like, look at Gensler. He's like, I'm going to take all of you down with me. Like what the hell is that?
Sort of
right?
this idea that like the worst enemy you have is one that has nothing to lose.
Yes. And I think that's where we're getting to, right? Like, the game's over. He lost. The last thing you want is some crazy person flailing around, right? Like that, that's going to do
the hope that I have, Kain, though, is like what gave me the most amount of comfort over the last couple of years has been that you believe that the judicial system is strong, and will interpret the law how it should be interpreted, and that's always been the case. Like Ripple, multiple Coinbase cases, Grayscale, like it's all been ruling in favor of there is clearly an overreach by a 3-letter administration, and you peel back that overreach and you interpret the law. And even in a very anti-crypto administration, I mean, this is the whole point of of democracy.
Checks and
balances of power. Of like study Montesquieu, folks. Like, so I'm not as concerned. While I hope Trump wins openly, I do hope he wins. I mean, he's just someone that has been pro crypto. It's hard not to rally behind him. Come at me, woke folks. I'll mute you all day long. And so I still think he wins, but even if he didn't win, you know, you still have like this campaign in and of itself has been a very positive catalyst to get other people,
Agreed.
other governments, other people talking about it. It's
Agreed.
continues, like every time Trump goes on, every time JD Vance or people that support him talk, like openly talk about crypto, the more something it's talked about in a positive light, it more marginally decreases the career risk of this industry. The, hey, can we buy Bitcoin on reserves kind of stuff. Like none of this was in the conversation. Even if it doesn't happen, it doesn't matter.
Yeah.
It's being talked about, and we weren't even there like 3 years ago. And
Yeah, I mean, yeah, exactly. Crypto was not inside the Overton window,
no,
and now you've got like presidential candidates at the Bitcoin conference. Like
yeah,
that was not on anyone's bingo card 3 months ago. Like it was just not even a thing, right? Like
yeah,
so, yeah. I think directionally we're fine. I think that it is interesting to see that when you have regulatory agencies able to kind of wield these chilling effects, right? Without the need to, regulation by enforcement is fine if you've got to go to a court, right?
mm-hmm.
If you got to actually go to court and prove your case, when you're just going around holding a gun to someone's head and being like, hey, do you want to settle? Right? Like,
It's
yeah, I
different,
guess
yeah.
so.
Because not all,
I get
yeah, you need resources to fight.
exactly.
True. Yeah.
And so that creates
The
this really asymmetrical effect, right? When they can turn up and be like, give me all your money.
yeah. Yeah, no, that is very true. I think we can talk about things that go unnoticed, because I think in moments like these where it's like high noise, there are things that go unnoticed, and then you look back and you're like, "Oh, yeah, I was like sitting there in plain sight, like it's so obvious to be bullish." Like the Exxon case, for instance,
Yeah,
and the peeling that back
yeah,
is huge. Every lawyer that like has threaded, like there's like 3 Collins, and then there's like the Paul from Coinbase and Jake Shavinsky. There's like 4 or 5 like legal folks that I follow, Gabe Shapiro and a few others. And my interpretation is that basically, to your point around being held hostage, like it dramatically limits the ability of agencies to go around and just kind of like
yeah,
bully people. And it puts more emphasis on lawmaking and the people in Congress to like, so, yeah, I think that was like, I believe it's fully settled, or will, like, it's a thing.
yeah. It's a thing now. I mean,
Like it happened. Like there's
yeah, it
no
happened.
ambiguity
Yeah,
whether,
the Chevron,
so it just got
Chevron.
peeled back by the
Yeah,
Supreme
yeah,
Court
it
or whatever.
happened. Yeah.
So that's really big because it, irrespective of the political climate.
I mean, it's this dismantling of the administrative state that's built up over the last,
Yeah.
like 50 years, right? Like, all of these agencies making their own rules with their own kangaroo courts and, saying, actually, no, like
Yeah.
we have actual courts, right? We have lawmakers to make laws, like, and
Yeah.
I mean, like, obviously you can go very deep into, should Congress need to, make interpretations of every single nuance of but you need it's kind of that push pull that I was saying at the beginning, right? Like you need some check to be like, okay, this is the pendulum swung too far over here. Let's bring it back, in this direction. And that's that kind of swinging, between 2 extremes. Hopefully, on average, you're in the middle, right?
Yeah.
And I think we're at a point in time where it's swinging back the other direction.
For sure. And even that marginal, regardless of, we all obviously want it to swing in the total opposite direction, fine. But you don't need that for markets in this industry to move forward. It's just the inflection point where things start price in, where it's enough to drive the conversation with institutions. Morgan Stanley just came out saying, "Hey, we're actually gonna be able to recommend and sell these crypto ETFs to our clients." That's huge.
Yeah,
huge. Jamie Dimon now, like, maybe changing his tune. I don't know, man. I couldn't even fucking whisper Bitcoin on the elevator at risk of being fired when I was in the investment bank. This is 2012, 2013.
Yeah.
different times. And so if you look at, everyone's looking at flows, and traders are looking at flows every day. I'm like, yes, but like understand what's
Zoom out.
Zoom out and understand the nuance behind the flows. Most of them are self-directed accounts. It's people that control their Robinhood. Couldn't log in, by the way, on Monday. Why DeFi? Okay, let's not go there. But most of the wealth in America, most of the wealth in the market is from registered RIAs. Like, these are advisors that, have the discretion to call up their, 70-year-old folk in Florida, be like, hey, you should buy this thing and it should be in your portfolio. Most of the wealth is there. And so unless I call JP Morgan private bank, they won't sell this product to me. They won't even recommend it. Can't be in an email. Go look at the Coinbase equity reports, and more analysts are really appreciative of the industry. Ethereum is very different than Bitcoin. Whether as much as we've talked slightly negative on Ethereum here, but like, it opens the conversation of crypto is way more than just a hedge, an insurance policy, to reckless monetary policy. It's like, this is a technology bet.
It's a technology platform, right? It's just tech.
Yeah.
It's just, and it's amazing tech, but it's just tech, right? Like, we look back on the web, right? And, that's amazing tech as well. It's ubiquitous now, and, we don't even think about it. And, 20 years from now, crypto will be the same. We'll be like, how are we having this fight with this cracked out guy about whether or not we could use this technology? Like, what was that madness, right?
Yeah. In fact, that is the signal, right? Like, you look at Napster and you look at streaming media, it was very messy. It was super messy.
There's always individuals being sued.
Oh yeah.
The
music industry lobby.
Like, it was, I was around for streaming. Like, I had my MP3 servers and was like ripping CDs, and I had the whole thing. Like, I was, I'm a musician, right? Like, that was like the craziest thing. It went from, and I was a teenager, and you'd have to buy a CD for $20 or whatever, right? Mm-hmm. And you could sell it back to the record store used or whatever, and maybe you'd like make a tape of it or something like that. And then all of a sudden, this technology came around. And it's like, you can have everything.
Yeah.
Like, it just it became crazy. And then the world reconfigured itself, and like, obviously we're still that's still playing out, right? Like, even streaming services, it's not 100% clear how that is going to eventually where the new equilibrium will be, right? Speaking of Spotify.
What do you think are going to
Spotify
pre-IPO shares? Yeah. You're not the best client of the bank. You're just the one that may pick up the shit. Is my
we got some, it's like, if you don't know who the sucker at the table is, if you're super excited to be the counterparty to some crazy trade, like, unfortunately, like the poor third generation rich kid that no one taught, like, hey, be careful, you're going to get your face ripped off if you're trading against someone who's got some information,
a wolf,
right?
basically.
Yeah.
I want to get your take on, we can talk about maybe like what are going to be the catalysts for this cycle. If the cycle hasn't started, we had like this dry run of sorts. What are those catalysts? And I'd like to contextualize that by, you and I were both in DeFi summer. There are some very clear catalysts. For instance, you guys, Synthetics, had pioneered the staking model, kind of bootstrapping, rewarding active participants at a time where most protocols just like burned, the buy and burn, right?
Yeah.
Which kind of doesn't make any sense now. You want to reward active participants. It was Comp and Compound launching liquidity mining that detonated for a variety of reasons. It was a very well-named backed project by the best funds in the space,
and it was in SF, right? It was a
Silicon Valley project, and the liquidity mining program was very juicy and attractive,
and it went insane. You had people recursively lending and borrowing, and like TVL went through the roof, and I think it caught a lot of people by surprise. It was like the breakout moment where if you hadn't been paying attention to what was happening on chain, all of a sudden it was like a 0 to 1 moment of like, whoa.
And then everyone was talking about DeFi. The market gave you 3 to 5 months to scale into that trade.
Yeah.
So you didn't have to be super early, but you would have come out ahead very much. When I say ahead, outperforming the majors, Bitcoin, ETH, if you had kind of woken up to it and like eventually, invested in these things, right? Now, we can talk about the tail end of like selling, because then that was difficult. But and we can come back to that later. But like, what are those things in your mind that are going to be the catalysts or inflection points for this coming cycle?
I think it's hard to know until after the fact, right? Like at the time, for sure, comp, we knew that something special had just happened, right? Like you saw the talking about attention, right? Like you saw and even back then in 2020, crypto Twitter, it was segmented, it was fragmented. Like the attention was fragmented. There were people who were these boomer, like Bitcoin bros that had never done a transaction on Ethereum, and like comp got them excited. Like a bunch of people started like realizing that yield farming was a thing, and
all Mint want is like juicy yield.
Yeah. And then you had like crazy stuff like Badger DAO that was like designed as like a honey trap for
like yams. How could we forget?
Yams and but there was stuff that was like specifically designed for Bitcoin maxis, being like, here you go, like here's a little taster for you, right? And so I think that like what's interesting is I don't even know whether DeFi summer leading into 2021 was even the catalyst there. Like it was very PvP. I don't know if it necessarily brought that many new people in. It did kind of set the scene for what happened later to an extent, but like DeFi from that point, from like August or whatever, really underperformed. All of DeFi kind of peaked around like Feb of 2021. And then the rest of the market, all the Alt L1s, like the Alt L1 thing really killed DeFi. Because DeFi was only on Ethereum. The Alt L1s had no DeFi. And this shift in narrative away from DeFi towards like Solana and Avalanche and
the Avalanche, Terra, Luna.
Yeah, what was it? Lu, Avax or something like that, right?
Something like that. Saka may remember.
I mean, God, Terra. Like, it's funny. I still, I made a joke, right? Because Natter went to prison, got arrested, right? And Natter from
but now recently you
BitClout, like last week, right?
And I knew the complaint was filed, but I didn't realize he got
arrested. He got arrested. Yeah. And I made a joke that like my hit rate of calling out people and them going to prison is like still running 100%. And I was thinking about it though. I actually went back and looked. I don't think I ever publicly called out Do. Like I made some like snarky comments about, stealing the Haven white paper and stuff. And like, I still remember that like I remember the Korean blockchain week, right? Like they had a stablecoin panel. This is like the funniest thing ever, right? So Jordan's in the audience. There's a stablecoin panel. It's like someone from Maker, someone from Basis, someone from Flamingo, became Algorand. Remember there was that it pivoted like 5 times. It eventually it became one of the algo stables, Algorand or something like that. Anyway, I can't even remember what exactly what happened there. But so you had like these 7 stablecoin projects there, right? And they start off the panel and they're like, walk us through your stablecoin, right? And I'm sitting there next to Do. He's to my left. They start with him. And he's like, so my stablecoin works by having a payment network where you have a collateral token that collateralizes the stablecoin. And then there are fees from payments that go to the collateral token holders. And I'm sitting here, I'm like, what? Like, this guy's literally reading my white paper. Like, what is happening here, right? And Jordan, like the look on his face, he was like 6 rows in, and his eyes are just like, he's looking around like, this is like,
Yeah.
is this a comedy sketch or something? Like, anyway, so then it gets to me, and I'm like, I'm the same thing as that guy.
What he said.
Literally, like,
earlier.
it's the same thing, right? And later on, I went over to him and I was like, hey, like, I haven't heard of your project. Like, what's the deal with it? And he's like, oh yeah, we love the Haven white paper. I'm like, yeah, I get that. I can tell, right? And there were, and anyway, he was so earnest, and at that time, I think, like, well-meaning, right? Like, this is like before his villain arc had started, right? And he started this group of stablecoin founders that, like, went for like a couple years, right? But there were multiple scam projects in there. And they, like, rugged or just dipped out. I can't even remember the names of them anymore, but I'm sure you remember. But Nader was in there, and Nader did his
basis.
Hey, we're shutting the thing down because of regulatory pressure. What, like, the funny thing is, when you look back at it now and you're like, regulatory pressure, motherfucker, like, that was regulatory pressure. Like, you have no idea. Well, like, we were so naive to think, like, the idea that there was any scrutiny at all, right? And so he's like, oh, we're shutting it down. And they did that, like, super grifty thing where they had taken a bunch of ETH, and they took the ETH price and, like, rolled it up in some way where the founders ended up with like $10 million left, right?
Yeah.
And paid everyone back the rest, like, whatever the stables were, and, like, took the ETH. And I was like, wow, okay, that's pretty crazy.
Yeah, I remember, because I was an investor, and I funded stables, not ETH.
That's what we talked about this, and so you got your stables back, but the people who funded ETH,
no, yeah, they were royally. It was like how the FTX estate is probably going to, determine liquidation, like, the price that you get back. Crazy, right? It's a huge grift. Funny enough, Do came to me, and I think I was at Palo Alto at the time, and he walked me through the white paper at a coffee shop, and I had already invested in Haven. I'm like, yeah, I think this is a pretty big conflict, and I ended up passing. Much later, I met him when he was getting traction, and every conversation that I had with the guy, he wasn't forthcoming. I would try to dig deeper, like, okay, how does chai work? Like, walk me, like, I want to understand the metrics more, like, and it was like, you're dumb. You don't understand this network. Go do more work. I'm like, no, man, I'm an investor. I have the fucking money. I ask the questions. You give me the answers. Otherwise, I don't invest.
Yeah.
So stop calling me otherwise. Like, Yeah. But you're right. I mean, I think overall we can, we could probably, like, I had him on the podcast at Empire right when he was buying the Bitcoin on reserve, and
oh, that's right.
That could have saved, honestly, that could have saved it to some extent.
Yeah.
Like,
with enough time, right?
With enough time.
It's a little bit like,
it was too little, too late. If you had bought Bitcoin and you'd been buying it along the way,
exactly.
But it was a carry trade. Again, folks, carry trades are the reason why most people and all the big hedge funds, including the market wizards, blow up.
Yeah.
It was a carry trade.
Yeah.
PTM. Yeah. But I think that's a good point. I mean, I don't know where you're going with it. And more so, I think those kind of things are the things that, like, keep people from digging deeper, because the negative headlines carry way more attention and linger far. That smell lingers far more than positive stuff happening under the hood. And then, unfortunately, people take a one size approach. It's like, oh, you're a stablecoin project, yeah, you're in the Terra camp, amigo. Like, you're an exchange, yeah, good luck, you're FTX. It's like, and I just think that's a good opportunity if you're paying attention, if you're in the weeds, to have that conviction.
Of course, to be able to differentiate between Terra and Ohm, right? Like, okay, algo stables are insane for reasons, right? But, like, they're all different. They're all insane for different reasons, right? If you just lump them all together, Ohm I find so funny because, like, the fact that they broke the magic, and, like, I've talked to Zeus about this. I'm like, you broke it. Like, it was magical,
Oh.
and you made it stable. Like,
Okay.
it's crazy. It was a stable coin that was not meant to be stable, and then you fixed it and made it stable, and now it doesn't work.
Yeah. um, I'm curious, as you think through, so like you have this, you're a founder, you're a builder, but you're also an investor. Like you have, with a few folks that you've met along the way. I guess I don't know if you want to say what that is, but similar to me, like you invest in startups and projects that are looking to build cool stuff, and we share some investments together. Um, when you look at like the market right now, clearly they've sort of don't really like projects that have been around for a while but are unlocking, and some
Yeah.
funds are clearly selling indiscriminately to get paid this year, because they're below the watermark last couple of years. I don't want to get into the math. Google high watermark,
Yeah.
and people wanting to clear it, and you only get paid when you clear that.
You gotta liquidate some stuff.
And you got to liquidate some stuff. So if you're up 6x and then the price goes down and you still can sell at a profit, you'll take it because
Incentives.
you can crystallize that, so to
Yeah.
speak, and earn
Yeah.
carry on it. And I think you observe a lot of the performance, a lot of these coins that have been unlocking, particularly ARB, in my opinion, is one that has been severely kind of impacted by this. Like the price has gone down like from $2, and as soon as the unlock's happening, it went all the way to 40 cents.
Yeah.
It's clearly underperformed, but it's arguably, one of the more solid teams and projects out there.
Agreed.
And so we're just in that state of the market. My observation is at some point it will catch a bid. There will be a price by which that becomes interesting. I don't know where that is, but you just need new money to come into the space. You haven't had new money come into space since like November of last year,
Yeah.
when central banks eased, and then you had the Bitcoin like trade, but it's nowhere near in the US. Every fund that I talk to that is raising money in the US, or raising, anywhere, they're not getting any flows from US, certainly not institutions in the US. As soon as that changes, I think, to your point around where the cycle hasn't even started, if I were to pinpoint why, it's like you just don't have flows coming in.
Exactly. There's no, the difference I would say today versus other times, right, is the window, the connectivity between TradFi and crypto was like this big, right?
Yeah.
And now it's huge. Like the ETFs, it's a giant door, right? It's a door in and out though, right? But there will come a time in the near future, I think, where, imagine the FOMO when you have Bitcoin ETFs that are ripping 10% a day.
Oh.
Like it's like it's inevitable, and it's just sort of like that, and it doesn't really matter, in my opinion, especially Bitcoin and ETH, right? If there was only a Bitcoin ETF, it is sort of detached from everything else, right? Of course, there's a wealth effect, but it takes time. Like ETH is genuinely connected to the rest of the ecosystem deeply, right? The price of ETH goes up, everything flows through, it's all connected. So, if the Bitcoin and ETH ETFs really start seeing inflows, I think you will see some stuff, really moving very quickly. But I guess the question is like, to what end? Like what, where does it go, right? And this is, I think, the question that I have been trying to answer, or maybe like it feels like with synthetics that and we've talked about this, like it's not finished, right? That we built this amazing infrastructure, but like it's not a science experiment. Like people are supposed to use it. If we're building new financial plumbing, if people aren't using it, then it's just this theoretical exercise, right? And okay, yeah, people use it. There's some enthusiasts there, but it's not accessible. It's still off in its own little, bubble, right? And so my view is that like if we don't make it easy for people to access it, then we've failed. Even if the technology is good, right? We need a way to bring people into it. And I think that over the last like 18 months, we've invested in so much infrastructure. It's all coming online. We can actually replicate the experience of centralized platforms with DeFi, finally. And as I've been going through this exercise, like so many of the like crazy cope things that I used to think have been like evaporating, right? Like one of the things that I think a lot of DeFi people still think is like, we're DeFi. We have all of the stuff. Like DeFi does compete with Binance. We've got Aave. We've got like, it's actual madness to think that someone is going to come in and work out how to connect a wallet to 58 different dApps to like get the things and stitch it together, right?
Yeah.
Like people want platforms. How did we ever convince ourselves? And I think at the end of the day, like, especially if you're a founder, you will believe what you need to believe to survive for the next day. Right. And so when there was no way to bring all of this together, right, it was like, well, I'm just going to believe that maybe eventually people will turn up if we build good enough stuff. Right. And now I'm like, no, that was idiotic. You need to actually build a platform and you need to integrate all of these different things into a consolidated platform that a person can sign into with an account and do stuff they want to do. And if you can't do that, it's not ready. And even more so, the other thing, right? We've been sitting there being like, we're going to change TradFi. We're going to replace banks. We're going to replace all this shit. We can't even beat Binance in our own industry.
Yeah, there you go. Yeah. That's quite true. I mean, I think there's a very common phenomenon of like in technologies, like even in the internet, like unbundling and then rebundling. At the end of the day, your point's a really good one. Like, I think we had to go to this unbundling. You had to go build like the core primitives, the Legos, if you will, of the money market, like Compound Ave and a synthetics platform. You had to have maker types,
Maker,
and try out different
RWAs,
stablecoin stuff. Like, if you played it right, yeah, the upside was huge because you should get paid a lot in that experimentation phase. We're still in it to some extent, marginally less, but still in it, because we haven't really seen kind of new primitives, so to speak, from a use case standpoint, like as Chris Dixon calls skeuomorphic. Sorry, SAT word alert. But like we're just copying what works in traditional finance, right? And so I think, yeah, it's going to be interesting, like this adoption phase. Your point around the ETH ETF is a really good one, because that people that don't understand, like, ETH is being staked. The more flows that go into the ETF, like marginally the flows required to push the price up higher, and the wealth effect that has into other things in the ecosystem is very direct.
Yeah.
And ultimately, like, I still think that like something like a Coinbase wallet and that base experience, I hate like top down math, like even if 2% or 5% of all 100 million registered Coinbase users interact on chain, but like you kind of need that. And it's actually amazing that we have a company like Coinbase that is willing to reinvent their business model and cannibalize certain parts of their business to say,
Agreed.
We want people to come on chain. Oh,
That's the biggest signal. That is the biggest
Yes.
signal for me. The fact that Coinbase is like, we're all in on this, like regardless of what network, what chain, whatever, like, and Coinbase is a battleship, right? Like it's a big thing to move. And Jesse, I think, has done an incredible job in finding a way to be nimble inside, and get enough autonomy to be able to like do this. It's incredible. And it's the biggest signal. Like I think if you go back and you're like, what was the thing that made it obvious that like we're all going to go on chain? That's going to be one of them. It's like the launch of Base is going to be like, it was obvious. Coinbase is disrupting themselves, launching a chain, shutting down all the centralized infrastructure, bringing people on chain. Like that was an obvious sign that this is going to be a shift.
Not only that, but the fact that Coinbase is a public company, you already started seeing analyst reports appreciating the sheer profitability of a crypto protocol. Yeah. Historically, the darlings of Wall Street have been software as a service companies that, they're growing. There's like a magnificent SaaS, right? They're growing 20% year over year. They have 80+% gross margins, and they have certain customer like ARR, recurring revenue, and certain retention. That's it. If you have those three and you're above 100 million ARR, you're the glory of Wall Street. And back in the day, we were like doing these comps, right? Of like compare Coinbase to Uniswap. one has hundreds, if not thousands of employees, huge overhead, is doing X amount of volume. Uniswap has 10, maybe 20 employees doing certain days similar volume and 100% pass through of the fee. Like, oh, but they're not paying the fee back to uni holders. I'm like, that's below net income line. That's a dividend.
Yeah.
That doesn't matter. That fee is accruing. By the way, LPs are making money.
Yeah.
And so I think the biggest, like the idea that Coinbase is launch Base, like analysts are appreciating, like, okay, now they clocked $20 million of revenue from Base this quarter. It's all pass through. What the hell is this business model that we've like suddenly woken up to? And what that does to transform and like their income statement is huge. Like that line item of Base, imagine what that looks like when you have more usage and the profitability that drives to the exchange.
And
People are gonna be like,
just,
this is not even an exchange fucking business anymore.
I know.
Like, because people are the complaints you hear from analysts are like, oh, the fee's gonna go down, right? Retail, they can't charge this fee, and institutions, there's pressure. I'm like, yeah, well, they're custodying most of the ETFs, but fine. I hear you on that. It's like fees will come down. Like it's your margins, my opportunity. Someone will come in and,
sure.
Anyways, fine. But Base, I would go as far as saying probably Base is a bigger contributor to EBITDA, like net income, than the exchange business in 4 to 5 years time. And when that happens, people are like, now imagine in a regulatory environment where we can start calling these things for what they are, which is highly cash flowing things, and the design space for it, we haven't even seen that. It's like that might come next cycle.
You can't do things.
Fair.
Everyone's so freaked out to try anything, right?
Yeah. We've been dancing around this governance thing. And look, the reality is I'm very excited because once the regulatory climate starts moving in a direction where you can start experimenting, it will unlock so many new things. The rate of innovation goes up because now, I don't know, you tell me, but legal fees account for at least 20-30% of every dollar that is raised in venture in this fucking space goes to paying some sort of lawyer.
But it's not even the direct cost. Like I don't even mind that, right? Like fine, whatever. Send me $100,000.
Get a good lawyer, fine, but it shouldn't be.
It's the indirect cost though. Right. Yes. Indirect costs of like attention and like I have our like kind of whatever you want to call, compliance operational person, right? Who's dealing with, 3 different sets of lawyers 3 times a week sitting next to me. And I'm like, that is a human brain that's just being soaked up in all, and like, look, I get it. If you were going to go and do an IPO, there would be a whole bunch of people and there's a whole bunch of rules, there's a process or whatever. Mm-hmm. But the issue with this is there's not even a clear process, right? It's one thing if it's like, okay, there's a process, it's very involved, it takes a lot of people, you got to get through it. This is like, you got to discover the thing as you go.
Yeah.
Every time.
And
like the amount of waste.
There's no incentive to go first either.
Well, there is if you're
well resourced.
If you're insane and well resourced.
Clinically insane. Clinically insane. Yeah. Yeah. Maybe just to round out the discussion, like I definitely agree with you. I more so where I'm bullish or bearish. I mean, I'm always of the mind, like I have conflicting views in my brain, which is I wouldn't be surprised if we have a leg down in the market. These assets have greater than 60% vol, 80% vol in any given year. Like you invert and you say, if that's the case, it always pays to have cash. It never pays to be levered, because then that allows you to spend more time in focusing on your process, talking to founders, interacting on chain, seeing what's working.
Yeah.
If you're running leverage, you can't even fucking sleep well at night. You know what I mean? Like it's.
I mean, well, this, the irony of ironies, right, is like Synthetics is a leverage protocol. People don't realize that, right?
True.
But you are living inside of a leverage machine. And yes, like the LVR is low. It's only, 15, 20, 25% or whatever. But also Synthetics is one of the most volatile assets ever invented in the history of the world. Like
with reason,
SNX, yeah, like SNX, the asset, like the IV on that is like I don't even want to calculate it, right? Like it's insane, so yeah, it's something that I think like having some amount of leverage in your portfolio at all times. Like it's taken years off the lives of SNX stakers, I would say.
Oh yeah.
Like, you know,
It's yeah. Like I think that's, for me, it's hard to argue that we're not in a better spot in 12 to 18 months, certainly in a couple of years. The last thing you want to do is kind of a handicap or like stack the odds against you by doing things that are going to put you out of the game permanently.
agreed. Yeah, you got to, it's time and market, right? You just time and market.
Yeah. Having cash flow outside of the space or just passive cash flow, whether you have clipping treasuries at 5% is oh so sweet. Then you can pile that in your DGEM, higher risk plays. Because then you're not really like thinking on the day to day of like sustaining your livelihood based on what the prices do, because you're going to end up hating the space for it.
Yeah.
You're going to lose patience.
People burn out. It's painful.
Yeah. Like investing is not supposed to be an easy game, as much as like these crypto Twitter traders make it seem like they're just like hitting every, 0 to a billion meme coin. Not the case, man. It's not. And I think it's noise. I think people
it's an attention game, right? But that's an attention game in and of itself, right?
People end up doing dumb shit not because they get frustrated with. I think people end up doing the most amount of dumb shit when they see other people making more money than them.
Yep.
And they may be making money as well, but when other people are making more money and your neighbor has a better
the Bitcoin sweater guys, right? Remember the people in Bitcoin getting hilariously rich and not you?
Exactly. But look, I'm incredibly excited. I think I'm earlier now because you now have like proper line of sight. Like when you got started, it's like Bitcoin had existential risk. We didn't know what we would use Ethereum for. And by the way, there are 10 other competitors to Ethereum. So anyone that says that Ethereum was a clear bet is full of shit.
Yeah.
And it's just like, no, there was like 10 other things that had been tried before golems made safes of the world. Yep. Go research them. It wasn't as clear as it is now.
In hindsight,
in hindsight, it was good. But yeah, Vitalik pitching you as an 18-year-old coming from Bitcoin Magazine. Yeah, you're going to give him $1 million? Yeah, you were just lucky.
Easiest trade.
Okay, Joe and not Joe. Gavin was the thing. Fine. A lot of professor coins haven't done well, by the way. So, anyways,
agreed.
I'm just like putting things in perspective because it's important. Like, people now come out on TV saying, "I knew Ethereum was going to be this huge." Yo, dog. I remember back in the day, I was hearing you. You were not like it was not as clear. We overfit the narrative. But look, credibly, this cycle, like. I think the edge is if you think that meme coins are a phenomenon that is going to go away, you're wrong. People end up betting actually more during recessions. But as an aside, whether you agree on meme coins or not, I don't care. It's just showing you its adoption. It's a funnel. It gets people in the space, and it's stress testing the infra. Like, that's
agreed.
Really important.
Meme coins put Solana through the ringer in the way that like some of the weird DeFi games in March 2020
100%.
Put Ethereum through the ringer, and it's like, oh, it turns out that none of this shit works.
Crypto kitties,
who knew? Like, we didn't think that there was a problem with the fee market until someone jammed a bunch of cats into the thing, and it's like,
this ain't gonna work. By the way, it's like the analogy is like, the porn industry really drove the internet and infrastructure. And it's like you're sitting there back then saying the internet is bad. We should ban it. We should stop developing it because porn is bad. I'm like, well, says who? That's your opinion. And so it's always like that, right? I mean, it's a great book that I have somewhere here. It's called How the Internet Happened. Go read it.
Oh yeah, I've read it.
It's super good. Yeah. And it's in a similar way. It's like I think like fine if you don't like meme coins, but like objectively, like just look at Solana, and if that's not telling you what retail adoption looks like, putting aside meme coins.
But the thing is, meme coins, it's like a red herring, right?
Mm-hmm.
Like, sure, there's meme coins, and sure, there's volume, and sure, it's attention grabbing, right? But there's a ton of other stuff happening there. Right. And if you don't actually go there, if you're like, oh, I've heard of that place, I saw something on the 6 o'clock news about it, meme coins. Like, that's how the fuck are you ever going to assess the viability of that place?
Yeah.
Like,
if there's a remote possibility of getting someone interested in deep in AI, gaming, well, meme coins marginally improve it. Now you might argue, oh, people get burned with meme coins, so they're going to go away. I'm like, no, once someone kind of opens Pandora's box, it just doesn't, just don't close it. You kind of don't
Agreed.
go back. Which is why people have these like very, and I'm going to wrap it up, I guess, probably soon, but like people have these very unpragmatic views about how this technology should or should not be used for. And that's never been the case. I mean, it's sort of the challenge with technology.
Yeah. The whole point is you don't know what it's going to be used for.
Exactly.
You can sit there and like wring your hands and be like, oh, I don't love this. Like, stop doing DeFi, right? Or, stop playing weird speculative games, right? But like the whole point is it's a permissionless system.
Right. I think that the intention of a builder, which is what you and I focus on, is this person trying to do good for the space?
Yeah.
If it's not right fraud, yeah, of course, no one is, I think, condoning that. Like, no one agrees with that. I think there are gray areas where you might feel like sports betting or the entire Vegas and Macau, operation is something that you really dislike. The alcohol industry, you can go down this list of like whether you agree with it
things
or not.
That should be stopped.
I think you want to be a good trader. You can't force your worldview into markets. Markets are always right. They don't fucking care what you think. They are arbiters of truth. And so if you objectively, you can have a stance of what you want to touch or what you don't want to invest in, but come to terms that fine, you don't like meme coins, but also don't kill yourself, because meme coins have been the only good meme coins and Solana and Bitcoin have been the only good performing things this year.
Yeah.
So accept the fact that you're going to give part of the upside. And if you're okay with that, fine. But also don't come out and like pontificate your worldview and criticize others how they're making a livelihood or not. And I think more observation and trying on chain, less less opinions is
100%
probably the way to go about it.
A useful posture. Agreed. This has been awesome.
Yeah, this has been good, man. I'm really excited what you guys are doing. Infinex, make it easy people to interact on chain. It's good to see you.
We'll catch up.
We'll catch up
in a couple months.
Last thought: anything that you invest in, or like if you were to pick one big catalyst, deep in AI, maybe DeFi again, NFTs, like what are you like most? Maybe one top 2 or 3 things that you're like mostly kind of paying attention to.
This is the interesting thing, right? I actually get to be agnostic now. And the point of Infinex is to build a system that can rapidly integrate new infrastructure. So I don't even care. I don't care what it is. I don't care if it's like NFTs version 2. I mean, remember DeFi 2.0, right? We're going to have NFTs 2.0. It's going to be a thing for sure, right?
Yeah.
There will be something that happens and it'll be a post hoc rationalization of like, oh, that's the thing that started it. And like, who the fuck knows? No one knows. But we're building a platform that no matter what it is, we're going to be able to like rapidly integrate it. That's my goal. And I get to be agnostic this cycle.
That's good. Well, you got to tell us what that is later down the road as you start.
Well, the good thing is we'll know, right? We'll have people that we can point at it. We'll know. We'll be able to tell really quickly. This is actually getting traction, right? We've got distribution power, and people are using this thing. So it's gonna be very interesting to watch.
Amazing.
Awesome. Thank you, sir.
Sir, great coming on the pod. Thanks for having me on.
All right. Talk soon.
Take care, guys. Bye. Should we